Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, January 19th, and here's the day we've been kind of looking for. We got a lot of economic news releases scheduled for today. So jump right into the weekly jobless claims. And for jobless claims, we got last week. I guess they revised it. It was 399. They revised up to 402. So we went above that 400,000 threshold as we mentioned. So there was concern last week a little bit about jobs, maybe going more people applying for unemployment. They did kind of have a forecast a little bit lower at 375, and it actually exceeded that. So we actually had a really nice jobless claims report today, and you'll see later on that how it's affecting the market. So that's part of the reason why the market is where it is today. Another item to look is the CPI, or Consumer Price Index, for December. We had 0 for December, and we figured it'd uptick a little bit, and basically we stayed at 0. So the headline number was at 0. But if you take out volatility of food and energy, we had a negative -0.2 back in November, and we figured it would uptick to about 0.2%, and actually came in at 0.1%. So very tame inflation numbers right now. Inflation's looking pretty good, so that's a good sign. And this is actually one of the more important data that we're going to be looking at today. And housing starts for December. We had 685 for November, and we figured uptick a little bit, and it actually dropped a little bit. So that was a little bit disappointing. People starting, builders with the housing starts. So that was a little bit of a disappointment right there. But jobless claims, CPI numbers so far were pretty good. And then we got the Philly Fed, 6.8 for December. Figured uptick increased a little bit, and actually kind of disappointed. It improved a little bit, but not enough where we came into expectations. So that's kind of an important factor. So the manufacturing in the Philadelphia region didn't grow as much as we thought it would for January. So let's go ahead and jump over to the headline news. And as I mentioned, stock market's up. So a lot of those numbers, Philadelphia Fed or Philly Index, the housing starts probably were kind of bringing it down earlier, but the jobless claims in there and CPI report, and as well as some of these earnings reports that came out. So people like BofA, Morgan Stanley, and all of them were having some good earnings reports, and basically that's bringing the stock market up. So we'll take a look here how that's affected the bond market. Sorry about that. That's an old one right there. As you can see, it's actually affecting the bond market in a negative manner. So what that means is these red candlesticks means it's dropping down. So when the bond market goes down, that means interest rates are rising. Now we're below the 10-day moving average, and it looks like we're starting a downward trend right now, and that means rates are rising. So just prepared, interest rates are coming up a little, rising a little bit over the last this past week, as a result of good economic news. So obviously we would rather trade in good economic news versus just a little bit better interest rates. So with that being said, you guys have a wonderful day. We'll be in touch again tomorrow, and you guys are on my site. Please subscribe and get your free updates. Have a wonderful day.